Did you know that Tampa Bay is experiencing a boom in office space demand, unlike any other in the United States? While many regions are struggling with office vacancies, Tampa Bay developers say they just can't build offices fast enough to meet the demand. Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. According to a recent article by Rebecca Liebsen from the Tampa Bay Times, developers in Tampa Bay are finding it challenging to keep up with the demand for high-quality office spaces. This demand is driven by companies willing to pay top dollar for premium office environments, even as other parts of the country are seeing a surplus in office space due to the pandemic. For instance, about 23.3 million square feet of office space is set to be demolished or converted elsewhere in the United States, nearly double the amount of new office space expected to be constructed. In Tampa Bay, however, the scenario is quite different. Some of the region's most anticipated developments include new office spaces. For example, Dynasty Financial recently announced plans to occupy the entire 45,000 square foot office space at the residences at 400 Central, which will be St. Petersburg's tallest building. Chris Butler from Franklin Street highlights that the amount of new space being leased each quarter has returned to pre-pandemic levels, indicating a robust recovery in Florida and particularly in Tampa. The evolving workplace dynamics are also contributing to this demand. As companies shift toward hybrid work models, they're seeking office spaces that entice employees to return to the office, often favoring locations in vibrant neighborhoods with amenities like green space, fitness centers, and coffee shops. This is part of a broader trend where businesses are prioritizing lifestyle environments for their recruitment and retention efforts. A case in point is Midtown Tampa, developed by the Bromley Companies. This project has become a city within a city, offering offices, a hotel, apartments, and retail spaces. It launched during the pandemic, yet all its 290,000 square feet of office space were quickly filled. This success story underscores the demand for modern, amenity-rich, mixed-use developments that combine great real estate fundamentals with experiential design. Despite these successes, developers face challenges such as rising material and labor costs and high interest rates, which make securing loans for new office projects difficult. Many are opting to renovate existing spaces to align with new standards, as seen with Feldman Equity's renovation of the city center in downtown St. Petersburg, which is already attracting renewed interest. While Tampa Bay's office market is thriving, the contrast in Ontario, Canada, particularly in regions like Kitchener-Waterloo, London, and Cambridge, shows a different picture. These areas are experiencing a slower recovery in office demand, with a focus on multifamily and industrial spaces over traditional office environments. This juxtaposition highlights the varied dynamics in office space demand across North America. Araya Land Development has entered into a significant agreement with MRDIY, a major player in the retail sector. The deal involves the sale of land for the development of an integrated retail supply and distribution center. This strategic move aims to enhance MRDIY's operational efficiency and expand its market reach. The center will serve as a pivotal hub, streamlining logistics and distribution processes, thus supporting MRDIY's continued growth in the competitive retail landscape. This development is part of a broader trend where companies are investing in infrastructure that supports robust supply chains and efficient distribution networks. It's a clear indication of the growing importance of logistics in the retail sector, where swift and reliable delivery systems can significantly impact customer satisfaction and business success. In the context of commercial real estate, such initiatives highlight the shift towards integrated solutions that not only cater to retail needs, but also encompass multifamily and industrial spaces. This aligns with the increasing demand for mixed-use developments that offer comprehensive solutions for businesses looking to optimize their operations. Looking at the North American market, particularly in regions like Kitchener-Waterloo, London, and Cambridge in Ontario, Canada, we see a similar emphasis on developing integrated commercial spaces. These areas are focusing on creating environments that support multifamily, tenant leasing, and industrial activities, which are driving the demand for such versatile developments. In contrast, the United States presents a different picture. While integrated developments are also gaining traction, the focus in many American cities remains on office and retail spaces. However, the growing need for supply chain efficiency is pushing more companies to consider integrated models that enhance their distribution capabilities. The deal between Araya Land Development and MR, DIY, not only underscores the importance of strategic partnerships in the real estate sector, but also reflects the evolving needs of businesses in today's fast-paced market. As companies continue to adapt to changing consumer behaviors and logistical challenges, the development of integrated centers, like the one planned by MR, DIY, becomes increasingly crucial. Today, we're diving into some fascinating commercial real estate trends that are shaping the industry both in Ontario, Canada, and across the Atlantic in the United Kingdom. According to an article by Karen Piontek, head of real estate at Prosperity Law, commercial property in the United Kingdom has remained surprisingly stable amidst global uncertainty. But with ongoing disruptions due to post-pandemic realities, tariffs, and political shifts, the future remains uncertain. Let's explore some of the key trends highlighted by Piontek. One of the major trends in the United Kingdom is the rise of mixed-use developments. With the way people shop and spend their time evolving, property developers are responding by creating spaces that integrate office, retail, residential, leisure, and green areas all in one. This trend is not just about convenience. It's also about crafting vibrant communities where people want to live and work. In Ontario, we see a similar shift, especially in areas like Kitchener-Waterloo, London, and Cambridge, where mixed-use developments are becoming increasingly popular. Flexible workspaces are another significant trend. Despite the rise of remote work, the demand for flexible office solutions remains strong. In the United Kingdom, cities like London, Manchester, and Leeds are leading the way in providing agile work environments that cater to different business needs. This mirrors trends in Ontario, where flexible leasing and co-working spaces are on the rise, particularly in tech hubs like Kitchener-Waterloo. These spaces offer businesses the ability to scale their operations without the long-term commitment of traditional leases. Falling interest rates are expected to make borrowing more accessible in the United Kingdom, potentially leading to more acquisitions and developments. While this could improve occupancy rates, the rising cost of materials and labor may pose challenges. In Ontario, similar financial dynamics are at play, with developers carefully balancing the benefits of lower interest rates against the backdrop of higher construction costs. This delicate balance affects decision-making in both regions, highlighting the need for strategic planning in real estate investments. The race to net zero is an ongoing priority in the United Kingdom, driving changes in how properties are developed and operated. Environmental, social, and governance considerations are becoming central to investment and leasing decisions, with ambitious targets pushing for cleaner, more sustainable developments. This trend is echoed in Ontario, where sustainability is increasingly integrated into commercial real estate strategies. Developers and investors alike are prioritizing eco-friendly solutions to meet both regulatory requirements and market demand. As we explore these trends, it's clear that commercial real estate is undergoing significant transformation. Whether it's the integration of mixed-use developments, the demand for flexible workspaces, or the push towards sustainability, these changes are reshaping how we think about property development and investment. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.